Good morning. This is Mike Stoller for the Stoller Real Estate Report. What's happening in the multifamily arena today? There's a lot of transactions taking place at different price rates, at different cap rates, and different locations. I'm very fortunate to have my friend Lev Mavashev, who is the founder and the principal of Alpha Realty, a top investment sales brokerage firm specializing in the sale of multifamily and mixed-use properties within the 5 boroughs.
Good morning, Mike.
Thanks for being over here.
Great to be back here. Thanks for having me.
So what's happening in the New York City multifamily market right now? How's it looking?
Well, a lot of, if I had to sum it up, I would say there's growing momentum in the market right now. It's different from, the market's kind of different from where it was, say, 18 months ago. We have transaction volume definitely increased. Manhattan alone saw a 60% increase in transactions. There are more buyers out there now. Capital that was sitting on the sidelines is back active now. We have foreign investors. They're out buying now.
Where are the foreign investors from?
Definitely, we're doing deals with a lot of these groups from Japan right now.
Are they dealing with local partners when they're doing these deals, or?
Great question. So it depends. A lot of them are buying directly, especially like the cleaner free market buildings. They're just buying it directly.
Okay, what do you mean by the cleaner free market buildings?
I mean like the gut renovated turnkey free market product that's easy to manage. It's not so management intensive, right? They're handing the keys to a local rental broker and they're saying just keep it leased up. Now, I am seeing them going into the rent-stabilized space, or at least the hybrid product. I'm not saying they're buying a totally rent-stabilized building these days, but if there's, let's say, 20% of the building is rent-stabilized, they're getting comfortable around that. And for those type of deals, they're partnering up with, local experienced operators and managers that have the experience managing this type of stuff.
So who's coming to you, the seller or the buyers today?
Definitely still more sellers. But you mentioned where they're buying. They're buying Manhattan. They're buying good stuff. But we're also seeing them going out to the boroughs. It's still, there's still some challenges in the market. I'm not saying it's all a rosy picture. We are definitely seeing a lot more activity. But we still have due diligence and regulatory hurdles, financing and underwriting.
Let's talk a little bit about financing and underwriting.
Sure. Rates are still stubbornly high. That still poses a challenge. So we still have that there's still that bid-ask spread between buyers and sellers, though it is narrowing, which is why we're seeing a lot more activity. But in general, you're seeing a lot more lenders in the market right now. We have anywhere from, obviously you have your agencies and your CMBS lenders, but you also have these local community banks that are coming back to the market, Dime, Customers, what else? Obviously Chase, they're actively back lending. Chase has always been lending, but again, you have the Dimes, you have the regional banks coming back into the market lending again. And, I always say that markets kind of drive the investment sales market. So another reason why we're seeing a lot of activity right now. But just to come back to it, overall, it is a healthy market for properly priced deals.
Okay, in a recent column in the Commercial Observer, you talk about a tale of two markets. What do you mean by that?
Yeah, it was a spin on the tale of two cities. So I think I touched up on this with you. Market's it's been diverging, but it's like really like you have the let's say you have the A market, where it's, prime free market buildings in prime locations, those are trading at 5-6 caps. And then the other end of it, you have these pre-war rent stabilized buildings, and those are trading at anywhere, 8, 9, 10 caps, So it's kind of, I have these conversations all the time. How's it you're selling, 5-6 caps, and then you have deals that you're selling at 9, 10 caps. And it's the product, right? The free market stuff, there's a lot of demand for it, a lot of capital chasing that stuff. On the other end of it, you have the rent stabilized stuff. You're not getting a lot of institutional capital chasing it. They can't make sense of it, right? How do you value something with, where, you have a cap on rent increases, meanwhile expenses are increasing, right? Or paperwork and diligence is difficult to wrap their head around. So those are the guys that are, the institutional capital. They're not touching the rent stabilized stuff. They're chasing the free market
What
stuff.
about this rent freeze?
Yeah, I mean, it's more of a sentiment and headline. I mean, look, am I seeing offers and deals getting retraded because of it? Yes, people are leveraging that for a retrade, but more the experienced guys always, nobody expected increases, especially with Mamdani. I mean, this has been priced in from last year when he won, and his campaign promise was rent freeze, no increases. So a lot of the guys already priced that in that they didn't expect. I mean, it was rare to see zero increase for 2-year lease renewals, but yeah, it wasn't so healthy for the market, just the sentiment in general.
Okay, with regard to the sentiment in the market, what happens if somebody has to make renovations and there's no money for that? How is an owner able to pass through? I mean,
Great point. What's suffering the most is what these landlords are doing is they're cutting back on repairs and maintenance. Ultimately, it's hurting the tenants, right? You have this rent stabilized housing stock, which is truly housing these middle class, affordable. These are the affordable rents housing our middle class society. And I don't know. The city should really incentivize the landlords to take care of this housing stock. They're not doing that by saying no
you
increase.
can't pass through
Nothing.
any
Correct.
charges.
Correct. Yeah. No. Nobody. That's why.
So somebody says, "Why are you even investing in this market if you can't get any?"
That's right. This is exactly why the institutional capital and the private equity groups are not buying this type of stuff. The buyers for the rent stabilized housing stock is your local owner operators. These guys, out in the boroughs. They already have a couple of thousand units, and they're picking up another, whatever it is, couple of hundred, sometimes even a couple of thousand units. We know some groups that are going to be buying a couple of thousand units in the next 2 years. But again, they're local operators. They already own thousands of units. They already have a management company. They already have systems. They already have an office in place. So they're double downing, kind of dollar cost averaging it.
If you're speaking to an owner who's considering selling, what advice would you give them right now in today's market?
It depends, actually. Again, depends on the product. If they own a free market building in Manhattan, I think it's a great time to sell. There's a lot of buyers, a lot of capital chasing that type of
totally
stuff.
free market?
Totally free market. Yeah. I'm talking about totally free market. It's a great time to sell it. We could go out to market, and we are selling these. I sold something in Williamsburg, nice big elevator building, prime location, free market, sub 5 cap. Okay, so there is capital chasing that stuff. So if you ask me, I would say let's take it out to market, let's properly position this and sell this. Rent stables, on the other hand, I would advise not to sell. It's just not a good time to sell. I don't know if things are going to be improving. Hopefully they are, but it's a really depressed market for that stuff.
If the city and the government are not offering you any incentives.
Correct. You're right. We're hoping something is going to change where it looks like something has to change. I mean, something has to give. You have a lot of vacancies. You have these buildings that are pretty much crumbling. Deferred maintenance violations. Nobody's taking care of them. There's no incentive to take care of them. I think the city eventually is going to realize, hey, this is our affordable housing stock. We need to find a way to take care of this. And the best way to do that is to incentivize the landlords to take care of their buildings, to take care of their own buildings.
So if an investor comes to you from Argentina, okay, or it comes from China or Japan, what do you tell them today?
I mean, most of them are already telling me they don't want to touch rent stabilized. I'll have a conversation with them, obviously, so they understand the market and what they're looking at. But most of them, when they approach me, they already know, listen, we're not looking for the rent stabilized stuff. We're looking for the, free market buildings in Manhattan or prime Brooklyn locations. But what my personally feelings about rent stabilized is, I think it's a great time to be buying this stuff. This is the type of stuff that you're going to look back, right? You always speak to these owners in Manhattan that bought their buildings in the 90s, right? Or in general, these guys that bought these buildings in the 80s, right? I think it's a great entry point into the market. I think you're going to look back in 20 years and you're going to be like, I should have been buying these buildings at three times the rent roll on 10 caps, which is what a lot of these rent stabilized buildings are trading for. And you have to circle back. My advice would be for these investors is try to find a local operator to partner up with and buy these buildings.
So I think you're basically optimistic on the market.
Yeah, for sure. I mean, look, again, I'm a broker. I'm facilitating these transactions. But yes, in general, taking a step back and looking at where we are in the cycle, I think it's a great entry point.
So where are we in the cycle? to finalize.
Again, two separate cycles. Free market product. I think we're in that like upper mid-level part of the cycle. I think there's still room to grow, especially as rent continues to grow. Rent is hitting another record high in Manhattan. For the rent stabilized product, we're at the bottom of the cycle. I'm not sure how much worse it could get already. It may even get just better. I hear insurance is coming down a little bit. More underwriters now are willing to insure this product. So I feel like some costs are starting to stabilize or even come down. So we might see an improvement in this rent stabilized housing, especially if definitely the regulatory environment has to improve. But again, I feel like we're at the bottom of the cycle. So I think it's a great entry point into that type of stuff.
I'd like to thank Lev for being here, and I'll have you back in a couple of months for a different perspective.
Always love being here, Michael. Looking forward to it.
Thank you.
Thank you.